You know when you leave money sitting in the bank and it doesn't do anything for you. That's what was happening to me. I had $5,000 just sitting there. It wasn't growing. It wasn't helping. It was just existing. So I thought, what if that money could pay me every month, even if I no longer worked for it? That's when I discovered the world of dividends. Think of it this way. It's like you bought a chicken, and instead of selling it, it laid eggs every month, and you kept the eggs without having to do anything else. Instead of betting on risky things like cryptocurrencies or trendy stocks, which go up and down like a roller coaster, I wanted something more relaxed, something that would pay me back little by little, month after month. So I started my journey with dividends, using just that $5,000, not to get rich overnight, but to build a little money that trickles down every month, stress-free. Imagine this. You have a friend who owns a bakery. You like what he does so much that you decide to lend a hand and invest money in his business. In return, he gives you a monthly share of the profits just because you helped his business grow. This is basically what happens with the dividends. When you buy a share of a company, a stock, it's like becoming one of its owners. And some companies, as a way of saying thank you, share their profits with you, depositing money into your account from time to time. That's the dividend. Now, some people prefer to invest in trendy stocks, the ones everyone talks about, the ones that suddenly go up a lot. But you know the problem? They also fall very suddenly. It's like getting on a roller coaster without knowing when it's going to drop. I didn't want that. I wanted peace of mind. I wish I could sleep at night knowing my money was working quietly. And you know the best part? With dividends, you earn just by holding the shares. You don't have to sell anything. It's like planting a tree and harvesting fruit every year. And if you use that fruit to plant more trees, and guess what? One day you'll have an entire orchard all to yourself. This was my plan. Don't try to get rich in a month. I wanted to build something that worked slowly, but without stopping, like a lace machine that works while I sleep. Now that you understand why dividends are so great, let me tell you how I organized this money to start off on the right foot. Now that I knew I wanted to live off the dividends, I needed to decide where to plant my money. But then a question a lot of people have came up. Where do I put my money without making a mistake? So I thought, if it was a three-legged stool, it would only stand up if each leg was sturdy, right? This is how I organized my investment, in 3 different parts, as if they were the 3 legs of this stool. First pin, dividend ETFs, 50%. Half my money, that is $250, went straight to 2 investment funds called ETFs. An ETF is like a basket full of good stocks. Instead of betting everything on one company, you buy a small piece of several at once. I chose 2 well-known ones. SCHD focuses on strong companies that pay and increase their dividends over time. VYM, it gives a broader view with several large companies that pay good dividends. These 2 are like 2 friends who know how to pick good companies for me. They do the heavy lifting and deliver the rewards, without me having to constantly analyze charts or news. Second leg, stocks of giant and stable companies, 35%. I put about 1.600 billion from companies everyone knows and trusts, the ones you probably see at the grocery store or use at home. Johnson & Johnson, health products, Procter & Gamble, Tide, Gillette, etc. Coca-Cola and PepsiCo, who has never taken it. Realty Income. This is a company that has real estate and pays dividends every month. These companies are like those grandmothers who never forget to give you a little gift at the end of the month. Always reliable. Third leg, technology companies that grow and pay. 15%. The last one, $750, went to companies that are always innovating, but that also share a little bit of the profit. Apple, Microsoft, Starbucks. These don't pay much now, but as they grow a lot, they can pay more in the future. It's like planting a small seedling, but one day it becomes a huge tree. Oh, and I left $300 saved. Why? because it's good to have a reserve to take advantage of opportunities when they arise. Never invest everything at once. Always save a little. Want to learn how to create a real and secure passive income? Sign up now and follow my step-by-step guide to investing in dividends, even starting small. This was my beginning. 3 parts. A solid foundation, diversified, and ready to grow. As soon as I invested my first $5,000, I was eager to see the results. Did this dividend business really work? Would my money actually start paying me back on its own, month after month, as so many people promised? It didn't take long for the answer to arrive. In December, just a few days after building my portfolio, I received my first payment. It was just $1.75 from Realty Income, a real estate investment company known for paying monthly dividends like clockwork. It was small, sure, but that small amount made a huge impact. This wasn't money from my work, nor from a sale, nor from a loan. It was my own money, planted in the right place, beginning to bear fruit on its own. January was a bit more exciting. Other companies stepped in and paid their dividends. Procter & Gamble, for example, paid me about $2.50, PepsiCo another $2.30, and the faithful Realty Income once again with its $1.75. In total, I received about $6.28. It may seem small at first glance, but realize I did absolutely nothing but leave the money invested, and it, discreetly, continued to work for me. February was quieter. I received my payment from Apple, which was about $1.50, plus the expected amount from Realty Income, total $3.25. The interesting thing here wasn't the amount, but the pattern that was beginning to form. Every month, some payment arrived. Even if small, the flow was steady, and that was what mattered most. March was the first truly significant month. Many companies and funds pay their quarterly dividends, so it was like a bountiful harvest. The SCHD fund earned me almost $11. VYM paid out more than $7. Johnson & Johnson, Microsoft, Starbucks, all deposited small amounts that combined amounted to almost $30 that month. It was the first moment I looked at the results and thought, this is really working. Growth was happening, even without me lifting a finger. April was more subdued, but still encouraging. I received payments from Coca-Cola, Procter & Gamble, PepsiCo, and of course, Realty Income. The total came to around $8.60. Even though it wasn't as much as March, I realized that this type of investment works in cycles. Some months are strong, others are lighter, but they all contribute to the overall growth. May was another quiet month. Apple paid again, and so did Realty Income. The total was $3.25. And do you know what that means? That even in a weak month, the money kept coming in. And it didn't just sit there. All dividends were automatically reinvested, buying more pieces of the companies. This meant that the following month, payments would be slightly higher, and the month after that, even higher. At the end of 6 months, my portfolio generated exactly $52.71, and all of this completely passively. This amount by itself doesn't change anyone's life, but what it represents changes everything. It represents a system in operation, a seed that is growing, and the certainty that with time and consistency, it can transform into a tree that bears fruit year-round. If you'd like, I can continue with the next part, the most common mistakes people make when investing in dividends. Within the first few months, I realized that many people were venturing into this world of dividends with the wrong mindset. And if I hadn't taken the time to study it carefully, I probably would have followed the same path. The most common mistake is falling into the temptation of investing in stocks with very high dividends. You look at a company paying 10%, sometimes 12% per year, and think, this is where I'll earn the fastest. But what seems too good to be true almost always is. The truth is that very high dividends are usually a warning sign. It could mean the company is in financial trouble, that profits are falling, or worse, that this hefty payout won't last long. I've seen many people excited about these miracle stocks only to have them cut 6 months later. And when this happens, the stock's value often plummets. In other words, the person loses the dividend and sees their investment depreciate. Another common mistake I see is not understanding the dividend calendar. Many people think every stock will pay out monthly, and when that doesn't happen, frustration sets in. But most companies pay dividends quarterly. Some pay twice a year. Others, like realty income, pay once a month, but these are the minority. I myself experienced this shock in December when almost no company paid me, simply because I bought after the quarterly payment date. Therefore, understanding the payment rhythm is essential. This avoids disappointment and helps you develop a more efficient dividend plan. If you want to turn small investments into self-growing profits, click subscribe and join our community of smart investors. It's also common to see people putting all their money into a single stock, or worse, a single sector. It's the famous betting everything on one card. What if that company fails? What if the sector goes into crisis? That's why I divided my portfolio into 3 parts: ETFs, stable companies, and growth companies, and chose names from different sectors: technology, healthcare, consumer staples, and real estate. Diversification is what balances a portfolio. It's what allows you to sleep soundly at night, even if one of the stocks doesn't perform well that month. Another classic mistake is wanting to use dividends right away. I get it. Receiving a few dollars feels like free money, like an unexpected bonus. But the truth is, the real power lies in reinvesting that money. That's why I activated DRIP, the automatic reinvestment plan. Every penny that falls goes back into the game, buying more shares and increasing my future income. If I had used that $52 for anything else, I would have killed the snowball effect right from the start. These lessons help me avoid common pitfalls, and if you're just starting out or thinking about building your first dividend portfolio, keep this in mind. Choosing the right stock is more important than choosing the right behavior. Patience, consistency, and strategy overcome haste and greed in the long run. After 6 months of seeing my dividend portfolio working, even with small amounts, it became clear to me that this system only needs one thing to grow: time. And a little more capital, of course, but not much. What really makes a difference is maintaining consistency, so I decided to follow a very simple strategy: continue investing every month, even if it's just a little. My personal commitment is to add at least $200 a month to your portfolio. It may seem small, but the effect of this over the course of a year, 2 years, 5 years is impressive, because each new dollar will be added to the ones already in there working, and all dividends will be automatically reinvested, buying new shares, which will generate new dividends. It's like adding fuel to the fire, only without having to light it all over again. Additionally, I've set some specific goals. I want to increase my position in 2 of the ETFs that have given me the most stability and return so far: SCH and VYM. Whenever there's a market dip, one of those natural corrections that scares those who don't understand it, I'll take advantage of it to buy more. When everyone else is selling out of fear, I'll be buying with purpose. I also want to continue slowly increasing my share in the realty income, which has been my most reliable monthly source. It doesn't pay much, but it always pays. And that, when it comes to passive income, is enormously valuable. Additionally, I've started looking closely at some new companies that could join the portfolio in the coming months. One of the ones on my radar is Home Depot, which has an excellent track record of dividend growth and operates in a solid sector: construction and renovation materials. It hasn't yet been included in my portfolio, but it's on my next list. Don't miss any tips to make your money work for you. Sign up and receive practical content to build your financial freedom, one dividend at a time. Oh, and of course, I will keep DRIP enabled for everything. This means that any dividends received will be automatically reinvested. I won't touch this money. It will continue to work quietly without interruption. With this simple plan, invest a little every month, reinvest it all, buy on dips, and stick with it. My expectation is that in the next 6 months, this same portfolio that made me $52 will now start paying me more than $200 in dividends in the following 6 months. This is not retirement yet, far from it, but it is the seed of something much bigger. This is how passive income really works. It starts small, grows slowly, but when you look back, you realize you've built something solid, something that keeps growing even when you're busy with other things. If you like, I can now close with a powerful reflection. Why this, even though it seems simple, can change your life in the coming years. After 6 months of seeing my dividend portfolio working even with small amounts, it became clear to me that this system only needs one thing to grow: time. And a little more capital, of course, but not much. What really makes a difference is maintaining consistency. So I decided to follow a very simple strategy: continue investing every month, even if it's just a little. My personal commitment is to add at least $200 a month to your portfolio. It may seem small, but the effect of this over the course of a year, 2 years, 5 years is impressive, because each new dollar will be added to the ones already in there working, and all dividends will be automatically reinvested, buying new shares, which will generate new dividends. It's like adding fuel to the fire, only without having to light it all over again. Additionally, I've set some specific goals. I want to increase my position in 2 of the ETFs that have given me the most stability and return so far: SCH and VYM. Whenever there's a market dip, one of those natural corrections that scares those who don't understand it, I'll take advantage of it to buy more. When everyone else is selling out of fear, I'll be buying with purpose. I also want to continue slowly increasing my share in the realty income, which has been my most reliable monthly source. It doesn't pay much, but it always pays. And that, when it comes to passive income, is enormously valuable. Additionally, I've started looking closely at some new companies that could join the portfolio in the coming months. One of the ones on my radar is Home Depot, which has an excellent track record of dividend growth and operates in a solid sector: construction and renovation materials. It hasn't yet been included in my portfolio, but it's on my next list. Want to avoid common mistakes and invest safely? Subscribe to the channel and stay up to date with the best dividend and financial growth strategies. Oh, and of course, I will keep DRIP enabled for everything. This means that any dividends received will be automatically reinvested. I won't touch this money. It will continue to work quietly, without interruption. With this simple plan, invest a little every month, reinvest it all, buy on dips, and stick with it. My expectation is that in the next 6 months, this same portfolio that made me $52 will now start paying me more than $200 in dividends in the following 6 months. This is not retirement yet, far from it, but it is the seed of something much bigger. This is how passive income really works. It starts small, grows slowly, but when you look back, you realize you've built something solid, something that keeps growing even when you're busy with other things. And if there's one thing I learned in these 6 months, it was this: freedom does not come from a big leap, but from small steps taken consistently. You don't need a stroke of luck. You don't need to win the lottery, discover the new Bitcoin, or guess which stock will double in price next month. You just need a simple, well-structured plan and the discipline to stick to that plan, even when no one is looking. The financial world is always promising quick results, but real results, the ones that last, the ones that free you, are silent, progressive, and often even invisible at first. While everyone else chases the next hype, you can choose to plant your own income tree, tend it, and watch the fruits come month after month. And before you know it, you'll realize that the Small amount that trickles in every month has become a solid source of income, that your habit of reinvesting has snowballed into a self-growing asset, and that the peace of mind you've been searching for has been building all along, unhurriedly, but without pause. Believe me, even starting with little, you can create something worth a lot. So if you've been waiting for the right time to get started, maybe now is the time. There are no miracle promises here, just real steps to help you start. Making money while you sleep. Sign up and follow this journey with me. What's really being built? It's not just about money, it's about freedom. When I started this dividend portfolio with $5,000, many people asked me, "But will this make you rich?" And I always answered with another question. Would you rather get rich suddenly and live in fear of losing it all? Or build something that will pay you for the rest of your life without you having to get out of bed? This strategy I've been demonstrating, simple, based on solid companies, automatic reinvestment, patience and consistency, isn't just a way to make money. It's a way to earn time, to win choice, to build freedom. Because every dividend that lands in your account represents more than pennies or dollars. It represents proof that your money is working, that it's generating results, even if small at first. And that, over time, these results accumulate, grow, and create a financial cushion that protects you, sustains you, and, one day, may even set you free. Many people want to know how to earn more. Few think about how to earn without having to work more. And that's what dividends offer, a way to unlink time and money. When this happens, you can choose how you want to live. You can work because you enjoy it, not because you have to. You can travel, study, care for loved ones, without looking at your bank balance in fear. This dividend journey, then, is not about getting rich quick. It's about get free, slowly and forever.